Good morning, everyone. Welcome to the Euro Trader on TopstepTV. My name is Marcus D. I've been trading for 18 years and I specialize in commodities that you don't see very often on Topstep. Let's start the day with a bit of a recap of my yesterday's trading. So we started on crude oil. Let's make this a bit bigger. Tried a little failed auction, didn't really get any traction, but then very soon after that, probably about, a few minutes after the stream, I noticed a lot of sellers were appearing on the tape. There was also some delta involvement in this decision, so I ran just a little scalp trade down to 66.14. And then I waited, and I waited, and I waited, and I waited, and then I got to post and white cut. If you don't know what post and white cut is, it's a pretty important time of day in commodities when the prices usually tend to reverse, or they can even accelerate as well. It's obviously a matter of context, but I was looking for a range trade in copper. Sort of wagged around, but then I got sick and tired of it, so I only took a few takes. Well, not a few takes, I took about 23 takes out of it, but I just didn't really want to sit there and watch paint dry. So the next one was the natural gas trade. Now, this is the type of a trade that I'm known by. This is the type of a trade that made my prop career. It's very late in the day. This one started around 6 p.m. my time, that is about midday central, and it banks on the fade into the settlement. So that's one of the setups that I nearly always look for, unless there's like an option expiry or something. But yeah, that one actually was pretty drama-free and managed to grab, I think it's about 37 ticks or so, whatever this is. Overall, very much a textbook setup. Now, once that was done, I was looking at the negative delta that kept growing on all of the equities. So it was literally going up, going up. It was a P-shaped day, basically some kind of unwinding of positions to the upside, or maybe some positioning for the beginning of August. And even though August traditionally is not a great month for equities, towards the end of the day and into MOC, I decided to hold that trade. This was power hour. So usually if we are allowed, if you're in your personal brokerage account, you can usually keep this sort of a late trade going for another 50 minutes after Topstep has to level out their positions. So usually I will keep these going. And then it would basically have a script that just takes me out at the end of the day. Sometimes these can turn into pretty good swings overnight, but obviously this one was too high up. However, the main reason for me doing this breakout trade very late in the day was the fact that we had the negative delta that just was not easing off. And usually that's a cause for some kind of a squeeze, a continued squeeze, meaning that the shorter term traders keep shorting it and effectively fueling the rally. So there was a little bit of context there. But again, because the time constraint, not the biggest trade, if I could have held it a bit longer, I would have. And I did so in my own account, and that was pretty nice little stress-free trade. And that was my day. So obviously most of them ended up as scalps. I was stalking the crude oil reversal, but it narrowly missed my my area that I was really looking for. And I'm kind of not happy going in off areas just ahead of whatever I'm looking at, because that generally doesn't really work out that well. But effectively, Hamza with the market is not driven by buying and selling pressure. Okay, what is it driven by then? Enlighten us over here. if it's not driven by buyers and sellers and the volume and velocity that they're coming in. Very interesting stance there, dude. But yeah, post and by cut reversal was what I was looking for crude oil, but because it narrowly missed the value low, which is what I needed to come to within a few ticks of, and it was actually quite a bit far away. So if I wanted to front run that trade, I would have had to use a much larger stop than I wanted to. So I decided to stay out of that, but that was actually a pretty decent trade on crude oil. Some signs of life in crude oil these days. I am very skeptical still because I think that they are kind of keeping it fairly contained. And if you look at the weekly chart, it's a very range-bound market. Very range-bound market. So it just kind of keeps pinging between ballpark 55 and 75. And if you kind of keep that in mind, certain trades are possible when you get to those extremes. However, these days I prefer to run those as some kind of an option trade. Now, whether I write an option or I do just an outright long for, a couple of days or so, 2 to 3 days. Obviously, if you're doing long options, you don't want to take them to expiry because the longer that you are in a trade, the more your profits are eroded by things like time decay. So, it will be dependent on whether I think that there's something of interest there. So, and, how much potential do we actually have in actually staying away from that area. And if it's super range bound once we get to those points, well, maybe writing an option could be something to consider. But anyways, let's see what we've got today. I'm gonna have a look at copper because it seems to be trying to exit the value area at the moment. Copper has been super quiet recently. Not surprising since it is August, apart from that huge fat finger trade that somebody did up here. Now, I was just kind of scrolling through Twitter, and I do follow Linda Rashke. She reckons this was an institutional fat finger trade. It's effectively a very... it was a very large position of 4,000 contracts that suddenly came in, and obviously took all of the order book, which was hilarious. I wasn't doing anything in and around that time, but it was, it was kind of popcorn moment to see what they're trying to do there. But yeah, let's put some levels on here. Let me just get rid of these chart executions because they just clutter up everything. Just to make the chart a bit cleaner. Now you can see very range bound. This was the reason why I went for a neutral day fade trade, and I actually had to go to the vet at this point where I would have taken it in the middle, but because I was a little bit busy, I didn't do it on time. Otherwise, I mean, it would have worked, right? Even if I held it, just kind of let it go, it would have reached my 2R. But it would have done it in like the next sort of 2 hours. And yesterday I just couldn't really sit there that long enough. And I can sit in trades usually, but if there's not much movement, I'm always like, what's happening there? Ooh, what's happening there? So, even I can sometimes have a limit of about 2 to 3 hours for when I decided to take it off the table. All right, we have some questions here. Rect is saying, what are your thoughts of buying a bigger account but trading in like a smaller account? For example, 150K, but trading how I do with 50K, currently trading 2 M&Q with a very wide stop. I think that's a great idea. I think wider stops, especially in light of tape bombs and stuff, is probably the way to go. I mean, whoever's been spending some time with me on these Euro trades, you guys know that I'm not a big fan of skimping on stops. So smaller size, slightly bigger stops, give that trade time to work out. But having said that, depending on your level of experience, Rect, If you are somebody who's already been trading for a few years, I'm talking like anything over like 5 years, does it really serve much purpose for you to be super conservative in your combines? I am very much in favor of your approach in the XFA. So you get a 150K account, you pass it, and then you do that in the XFA. So you trade with a smaller size as if it's a 50K, but you have a little bit more room, right? And you have eventually, when the time comes for you to size up, you will have a little bit more time to, a little bit more space in the risk parameters to manage it a little bit better. And also, let's talk about the live account, right? Live account changes everything. You go from, trading quite a few contracts in your XFAs, many people copy trade as well. And suddenly you're in one account with a 3K initial daily loss limit. It's like starting a combine all over again. This is why a lot of people struggle in the live. And I'll be honest, it's not very easy for me either, because I've gotten used to trading without that constraint of the daily loss limit once you've built up a little bit of a buffer. And then you kind of have to adapt to the new situation. Now you kind of come up a level, but they still want to see like trust from you and how you trade. It's not easy. So taking yourself through an exercise of trading smaller as if it's a smaller account will actually give you probably the best chances and the lowest risk of ruin metric out of all of it. Instead of rushing into an XFA and sizing up like a lunatic, I'm always going to say, yes, definitely trade, 150K as if it's a 50K. And the risk team is going to love you. They're going to be like, oh my God, you're amazing. So that's always a nice thing. The good news is asking the question that we've all been asking. Deeyana, how do you know how to find FTSE 100 on Topstep? Sadly, we still don't have Eurex, and we still don't have any European specific exchanges on Topstep. I am hoping with all of my heart that with the brokerage we will get that. I saw that MP just hired a whole bunch of people from the big tech. If they get on that case, it's really not going to be that big of a deal. And if you have a brokerage, really you should be able to just pay for any data feed that you want and trade that. So fingers crossed for everybody, guys. Speaking of DAX, I am stalking a failed auction trade. So I'm just going to drag over because obviously we don't have the data just yet. Once we do, I will absolutely be doing this on TopstepX as well. But yeah, here we are, 15-minute chart. This red box is the initial balance, so we try to get below it. The whole composition of today's price action is sitting above the value area, and so far, nearly 2 hours into this session, we have not gone back down to the value high. That could be a bullish indicator. I did do one short trade on DAX this morning before anything, because there is this whole takeout of Tokyo and then a reversal for the London Open. I call it the Frankie fake out. It's not just me that calls it that way. We used to call it that way back in the day when I first started in prop. So grabbed about 48 ticks out of it, and that's how I started my day with DAX. But now this failed auction might actually be something to have a look at. VWAP causing a little bit of trouble there. Obviously still always a danger that we might retest the value high, because it is a high probability area for a bounce, so at least a test. So that slight mean reversion could be on the cards as well. And yeah, so we'll see whether that can bring us a little bit of profit as well. Okay, I am going to maybe try just a tester trade on this copper. Let me just have a look at Bookmap, what's going on there. All right, so we have some negative delta there. Don't really like these wicks that we have, but still do you know what? I'm going to go down to the micro copper. What's the micro copper? just to kind of limit that risk, primarily because it's so range bound. And one thing that can happen, because copper is opening inside the distribution curve from yesterday, so it means we have not moved to any new levels. It's just still stuck in the same range. But it could also be looked at as a distribution, right? So we're distributing at a particular area. That smash down that we had, because whether it was an institutional fat finger or not, it is now an event that we can potentially take advantage of, and we have not done a great job moving through it. So whilst that is a structure that at some point might require repair, at the moment it's just kind of sitting there like your biggest nightmare and still causing some some resistance. All right, let's try a 5 lot here. I'm going to use a 45 tick stop and then see, you know, test the waters, dip the toe in, and then if we get smacked on the face, it's not going to be super painful. So that's just like $280 of risk. What am I looking for here? So keep in mind that the value area is ballpark, just ballpark sort of around here. And it's... yeah, it tried to go higher, faked it out, came back, rotated through the value. One thing that can happen with inside days is that you get this responsive long trade. Technically, it would appear as a failed auction, but right now we're actually trying to extend the initial balance lower. So where is the initial balance? To give it a visual representation, this is what we're working with even. So, you know, decent move away from the initial balance. And now we need some follow through. We have a few orders here, but the whole market is still exceptionally thin. Exceptionally thin. And that means whipsaws both sides can happen very, very quickly. So, you know, whilst this is kind of a disaster stop, I also don't mind it getting hit, and it's fine. To remind everyone, I have a long-term accuracy of about 43%. And July has been really, really tricky. It's been up and down, but kind of up. My profit factor and average win-loss are still within the statistical probability that, you know, you have a slightly positive risk reward, and obviously that's because the movements have just been very, very lackluster. You know, there's not that much follow through, and that makes things a little trickier during the summer, but that's okay. You know, you trade less and you trade with smaller size. You know, usually in combines I like to go up to about 4 or 5 lots, but I've been kind of sticking to 1 or 5 micros, so 1 mini or 5 micros, and just kind of slowly, you know, keeping tabs on my accuracy and everything. For the afternoon session, I usually replicate the trades that you see in the combines also, just to kind of track them, because at the moment we don't actually have analytics on live just yet, because it's an entirely different server. And at some point that's going to come. But yeah, so if I kind of look at just the beginning of this this week, it's actually slightly higher than my usual, you know, my usual numbers. Again, the more trade samples you have, the more that gets smoothed out, which is why I'm really not in favor of people going in for 2 days of trading and then going, well, my accuracy is 90%, and then you make them trade for like 3 months and their accuracy is nothing like 90%. You know, we actually get down to very, very low accuracy, and they're like, I just saw Bruno's message. She goes, 15 HG short, got it. Yeah. And yeah, so yeah, we'll yeah, we'll just see how this August goes, because August is typically a bit meh. You can keep hoping for some news. You know, we still have this tariff looming over our heads. So that might bring a little bit more bounciness. Tensation says level 2 is nothing more than advertising. Okay. And the fact that there's a centralized exchange and that there's two parts of order flow, real-time orders going through and orders sitting on the books. And the larger they are, the more visible they are. So that's also just like nothing. I mean, you can also say that price action is nothing more than an advertising mechanism. In fact, that's what Dalton says. It's just a product of volume and transactions that happen at a particular level. So isn't everything advertising? Should we go deep into this discussion with someone that's been doing this for 18 years? No? Okay. You know, price is an advertising mechanism. What do you think price is? What, just a random number that somebody pulls out of a hat like a rabbit? Like I don't, you know, chat is rilling me up already this early in the morning. What are you doing to me? I'm going to have a heart attack. I'm an old lady, man. Who's thinking shorts today? I'm not thinking shorts today. There's no real reason for it, unless we get tariff news. So if there's some negative tariff news, yeah, maybe. Okay. If we do get tariff news, I would agree some unwinding of positions and more pullbacks could be in order. But yeah, until such time, until Mr. Trump decides to enlighten us all with the progress or lack thereof, it's probably going to be bit of a nothing day. I mean, you know. Do we have any releases? Actually, that's a very good excuse to have a look at the calendar, isn't it? So, I've noticed I started taking on this, like, because I'm in Surrey now, and I hear a lot of people who are talking in a little bit of a different way than we did in London. And they're like, oh, I did that, didn't I? And I started doing that, and it's kind of annoying, so I'm going to try not to do that. Or she went there, didn't she? They just have this like confirmation thing that somebody did something, and then they repeat it. It must be like a sorry thing. So I've never noticed it before I lived here. It's quite funny. And they have a little bit more of an oi kind of. So I do hope I'm not going to start sounding like that, because now, you know, my accent is all over the place because English is not my native tongue. By the way, I am in that failed auction, long on DAX now. Just in case you're wondering, we'll see what happens at VWAP on DAX. That's moved up nicely. So there it is. Here's my account. It doesn't matter really. Who cares what you do in your live account? So today we have the ISM services PMI. So PMI at 3 p.m. my time. That is 9 a.m. Central. Yeah, depending on what happens with this copper trade or not, like in fact, whatever happens to it, it's probably going to be the only trade that I do for this session apart from DAX. If I had DAX, obviously that would be my primary choice, but we do not have it yet, so we have to be careful and wait. DAX obviously trades very actively during London because it's its main session, so naturally there's a lot of movement during this time of the day, which was the initial idea for these streams. But lo and behold, it's a year on, and hopefully we'll get it. Let me have a look at Financial Juice, just to make sure we didn't miss something overnight. UK PMI just came out. Forecast kind of on the nose. Like, it's not... it's in line. I would say it's in line. 51.5. Forecast was 51. Previous 51. So yeah. And German PMI also slightly above the forecast. So yeah. EU trades chief. Don't know how to read that, even though I am somewhere from that area, but Shevchevich, I don't know. I'm in contact with U.S. officials Lutnick and Greer to turn July EU-U.S. agreement into practice. Okay, well, I suppose that's a positive. Don't really see anything else that could put a wrench in the works there. So, yeah. Pretty light on the news front. Ready for Power Hour says, good morning, everyone. I was just thinking, who is brave enough to start trading copper again? Yeah. Sensation says, do love the brutal honesty of you. Yeah, that's got me in trouble before. I just, I don't see the point of being all, one way when you're doing, camera work and stuff. And then being completely different in your real life. I've always valued truth over anything. And I'm always somebody who just tells it like it is, even if it's going to be detrimental for me, right? I think I probably got a little bit better at maybe not putting everything out there. In Serbia, we actually have a saying, "Stona tona drum," which basically means, it rhymes very nicely. It means whatever's on your mind, you just kind of put it out there. It's like whatever's on your mind, you put it on the road, is the direct translation, which doesn't really make much sense. But what's the equivalent in English? I don't know whether you have an equivalent. Like, I suppose speaking your mind is one. It's not a very good analogy, though, is it? Like, you speak your mind. But yeah, that's really what it is. And when I was much younger, when I was in my 20s, my mom was like, Dee, you need to be a little bit more tactful with weight. And I was like, but why? She was like, because, people's feelings. I was like, F people's feelings. What is that? They need to learn to deal with it. And now we're in a situation where we have an entire new generation whose feelings are very, very fragile, I have to say. I think as traders, we're probably exempt from that. Because, just by the fact that you're here, no matter what your age is, it means that you're not your regular person. You're here because you want to do something unusual, and that immediately sets you apart. Whether you're consistently profitable or not yet, it's beside the point. You're here, you're trying, you're doing your best, you're turning up every day, and that deserves all the respect in the world from me. Joseph Anthony says, like that approach, let the truth prevail. Sometimes it hurts people, but it's better than faking it just not to hurt someone's feelings. Yeah. Yeah, whoever's talking Chinese in chat, please don't, because I struggle with Roman and Cyrillic letters anyways. So, yeah. Lazy Eyes says, living dangerously, shorting copper. No, following the plan and the real-time auction. If that changes, I will change with it. But right now, there's, attempts at an extension below the initial balance. I'm not guessing anything. I'm just reading what the market is telling me, right? And if that changes, then we change with it. If it doesn't change, we stay in on it. There's, you don't need to make a complicated. Just because people don't like to lose, that's not my problem. I am actually fine with control losses, and they are preferable. How does Coach Paul put it? Love your losers. Love your losers. That is key. You learn to love your losers. What does that mean? It means that your loser was well planned out. It wasn't a grasshopper trade. So you keep your inner grasshopper at bay. And then you're okay with losses, and they're not tragic, and they're not scary, and they're not this thing that derails your entire account in 1.5 seconds, you know? The good news says Chinese translation, new dashboards are not available for purchase. Yeah, they're still working on the new dashboard. Yeah. The hat, the grasshopper, has made an appearance. Yes. Just gonna mute this because my dogs are going batshit crazy. Yeah, so it's a hat. It's actually a children's hat because DB very small. Trade for pips. Can you go over gold? I can. Yeah. Let's have a look at gold. I'm going to put this on the side. Let's choose. Let's choose this because I'm not going to be trading crude oil probably for the next 2 weeks. Gold. Oh my God, I have so many lines. Let me. What is this? This is like days and weeks and months of drawing various levels. So let's clean that up. We need to start with a fresh chart every single time so that we're not using old levels and LSDs to make our decisions. I don't know whether there's a way to actually delete all of that all at once. If you know a key that literally wipes everything from the chart, do let me know. Because I looked and I couldn't really find it. But then again, I didn't look that carefully. So maybe there is one. So chat, help a girl out. I was doing measured moves here when we were at all-time highs. Alright, that looks a little bit more sane. Delete that. And this. 1 week. Flat as a pancake, flatter than Kate Moss's chest. Nothing to see there. Daily chart. Okay, a couple of supplies and demands, but still range bound. However, there might be nice opportunities because, as we know, gold does like to trend intraday hard. But it's an offspring zone, and we've been here like multitudes of times. We created this supply all the way in April. Then tested it once, then tested it twice, then tested it third time. Each time with a slightly lower high. Slightly. Just a slightly lower high. But it's a distribution. It's a distribution, right? Last time we created a demand area was down here, but even that one is an offspring area from this one here. Tested twice. But that's the nearest problem danger zone, right? So once we're there, where it goes from that point is probably more skewed to the upside than anything. But right now, the way I'm looking at this, we're sort of in the middle of nowhere. So daily chart not providing that much information because we don't have a swing extreme. So that means Swing extremes are probably not going to be on the cards. They're going to be more based on intraday setups that might not be offering a gazillion ticks, but only, you know, maybe 70 to 100. This was a contract rollover, so don't look at that. 4-hour chart. Distributed. Where is my visible range volume profile? That somehow got removed from here. There it is. Okay. Anything on the 4-hour chart here. All very, very thick. So again, very much in line with the distributing nature of this product currently. So that's not too helpful, but let's just look at the actual composition of the Z candlesticks themselves. So we have a little consolidation overnight. So Asia did nothing. London is attempting to take it below VWAP and to take it below this previous candle low. And at that point, we have nothing more to glean from this. Some congestion where this volume visible range point of control is located. That could be a first target, so in and around that 3402 area. And lo and behold, that's where the gamma wall is for calls. So we have some call and open interest sitting there. But at the same time, right now, we do have a GEX2. GEX2 is a big level, right? So if we cannot hold and sustain below it, maybe some reversals into that 4-hour range could be one of the hypos to consider. But let's have a look at some profile and quantitative extremes as well, because that can provide some more insight. All right, first and foremost, we're opening above value area. Value area for London for yesterday was at the edge of it is at 34.16. So we still haven't touched that. Still haven't touched that. If we don't touch value high, that could be the indication of buyers stepping in and holding. Just looking at this DAX trade, it's kind of struggling around VWAP, and that really needs to go. How many times have we been here? Not many. Okay, bid and ask spread is still kind of pushing to the upside, so I'm going to give it a little bit more time to build up the volume there. And if they don't, then I'm going to be out. Okay. Anyways, back to gold. Sorry, getting distracted here with my own trade. Yeah, you know what? I'm just going to take that because I'm not liking this. It like immediately went into a reversal. So I just took like nine ticks out of that, nothing much. I don't like scalping, but obviously if the market is just not giving you anything, waiting for it to all come back on you all the way and then some, it's not the best choice. So I took that off. And now we're going to chill on the side of DAX. Right, gold. GEX2, literally sitting at 34.20. If it goes into failed auction, there is a pretty decent chance of it reaching, at the very least, 34.30, which is the next GEX level, but also the top of the initial balance. Now, these areas are not really by accident. When it comes to the quantitative extremes, they're very far away, very far away. So we have 34.65 to the upside, and then we have 33.90 to the downside. So nothing really to glean much from that. And Yeah, and that gamma wall at 3,400, and then to the upside, apart from this GEX2 that we're literally sitting at right now, we have 3,450 as GEX1. So that is definitely an area that if they start kind of plowing into the long side, given the fact that we're opening above value, that's the open sentiment. I like to call that the open sentiment. Are they above value, below value, in or inside? And if they're outside of it, how far? Those are the questions that you want to ask yourself, and then each of those carries certain probabilities inside it. If we open inside value, more chances of it turning into a range-bound day, although there is a setup called the value rejection that banks on the price rejecting the value and then just keeps going into a trending day. Some of the biggest trending days have started from that open sentiment shift. So they were going, let's say, down, 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 and more down. Then they settle into the next day's open that is still sitting inside the value, and then they just turn it around and they keep going. In that case, it's a sustained auction, value rejection trade. So that's something to note. But again, gold, no swing extremes, so that will not be as applicable. And obviously we're opening above value. If we go into a value acceptance, so whenever I'm this close to from I below to value high, always makes things a bit tricky for me. So this is the initial balance. Let's change the color of that. Initial balance. And then the value edge right at 16.3. So it's like, well, which one is it? Is it going to be the value high reversal? Is it going to be value acceptance? Is it going to be a fake out value acceptance? And then they whip it back around and they keep going higher. The trend is very mixed on when I look at supply and demand as a trend indicator. Again, we are in a distribution on larger time frames, so very unclear for me on gold. Very unclear. I think it's maybe if we get to COMEX, that looks a little clearer because its value is actually a bit higher. And if we stay for COMEX open, if we stay below 34.24, that would actually mean some shorts. I kind of like that idea better than a continuation higher. And I'll tell you why. It's because of this already a rejection, and then now there's sort of slowing down. And what happened to my volumes? Oh, they are loading. Okay. Did it freeze on me? We might have frozen. No, volumes are here. I don't know what I'm talking about. Right. So yeah, we're kind of running out of, it was just loading it. Okay, that's fine. We're sort of running out of volume here. See how this big pump, then a tiny candle, and now we've already gone into some shorts here with, no real commitment there. So that means, with some commitment there. With the buyers not appearing early on, I would think that maybe we're running out of steam for the upside and there is some pullback to consider, especially considering the gamma wall is down below 3,400s. So maybe aiming for the previous day low. That could be the play here. Copper is now sitting around the HVL from the 0DT options, so again a decision point. Very slow so far, so I'm just going to sit on it and wait and see. They don't seem to be deciding anything. But yeah, gold, a little skewed to the downside, but I think that setup is probably best served during NYMEX. I mean, let's see what, in about an hour and a half, hour 15, we're going to have the LME open. I'm not going to be here because I usually finish the stream by then, but it's definitely something to consider. Because anytime LME starts trading, which is not for London, it's actually at 11:40 my time, so that's literally in about an hour and 20, 30 minutes. Then there's like a little bit more oomph to the price action. Until that happens, gold it kind of falls into this 2 hour, 3 hour nothingness, where I don't know whether they're asleep or they're just on the way to work or they're having morning meetings or what the hell they're doing. But yeah. Shay Hughes is saying D is the GEX level like POC for options. Not really. GEX is literally, GEX points, there's several of them. They're like, because the point of control, it's, the core definition is the widest point of the profile, which by default means it's like the middle of the middle. It's like a fair value of fair value, so to speak. When you have a distribution curve, what would be the thickest point of it? Usually somewhere towards the middle, right? But GEX is the open interest that means there's quite a lot of players, but at different points. And then GEX levels, according to MentorQ, the way they score it from 1 to 10 in regards to open interest. So it's similar, but typically it tends to be at the extremes of the day. The GEX levels tend to be at the extremes of the moves, and then they kind of act as stopping points. Whereas POC, if you're in a range market, it's just the middle of the middle. So if anything, you need to look for the price to run through it for the most part. Or it's a very good target for mean reversion trades off the top and bottom of the range. But it's not, it's statistically, it just doesn't really stop anything unless you add time into it. So, for example, if you have POC at the, and structure, obviously, if you had POC at the top of the extreme, and then we've spent some time, you could say, well, that's a distribution, and then a part of that distribution is that POC. That could be taken as a starting point for a swing trade. But you would have to take the POC from a bit larger time frames so that it's not like falling in the middle of the middle. So, for example, if I scale out of this, the POC is likely going to change a little, and it's going to give you a very big outlook of what's really going on. So if we go back all the way to 2023, we can see that the larger time frame POC has actually moved all the way down to 23, the 23, 3-year-old D is saying, 22.53, right? So much, much lower than where we are now. And really, all of this upside was done on pretty low volumes, like apart from a little bit of a slowdown around 26, 25. This is the first time that we're building some serious volume after, quite a few months. Even, I would say even, about 6, 7, 8 months. So we're building a volume shelf. I'm just going to let my old deaf dog out of the office because he works on hand signals. So I'll be back in a sec. And we're back. All right. Let's have a look at chat. Somebody's not happy with NASDAQ. I'm not surprised. Welcome to the light side. It's not the dark side because NASDAQ is the dark side. NASDAQ is the Darth Vader of trading products. Luke, come to the dark side. I am your father. No. You can tell I love Star Wars, right? Anyway, yeah, I agree that NASDAQ can be a crazy beach. Yeah, so I'm not, like, I used to trade NASDAQ, guys, back in the day, but then it went absolutely bonkers during COVID, and I'm like, I'm not going to watch a candle at nearly 45 years of age that just does all of this, like, up and down, up and down. Like, it seems like it's so undecided intra-candle during the regular trading hours when I like to trade U.S. equities, usually towards the end of the day, because I'm more of an end-of-day trader, and the exemption to that is DAX. Obviously, I quite like DAX setups earlier, but for all the rest of it, I tend to trade later in the day. And yeah, it's one of those weird things. Like you can get a smashing setup on NQ, but you just cannot stay on it because it's so psychotic. Intra-candle. Like all of my other products, usually by the time that you get to about 10, 15, 20 minutes into the 30-minute period, you can already see what's up, right? With NASDAQ, it's anyone's guess. In the last 3 seconds, it can completely change direction and shoot the opposite way and change everything. So if you're not somebody who is patient enough to wait for the actual price action signals from like 3 minutes, 5 minutes, 10 minutes, 15 minutes, and you like to front run trades, your front running of the trade is then based on something that never happened. So unless you're very quick to cut that, because now your trade has been invalidated, you get into so much trouble. Like the whole NASDAQ thing, I think, is people wanting quick cash. And they're like, oh, I'm not patient. Well, tough luck, man. You know, in order to become a trader, not remain, but to even become a consistently profitable trader, you have to develop patience. So that's like the first line of the job description. Be patient. Be selective about your setups. And this goes for scalpers and for us who look for maybe bigger chunks of the move. But as you've seen yesterday, it was all scalpy scalp for me. You know, am I looking for scalps? If the day calls for it. You know, this is why those of you who are in my VIP, I see a few of you in here, I asked in the survey, what is your style? And do you change? Are you flexible compared to the day type, like whatever the day calls for? Or are you just like, I only do quick scalps? That is my MO. That is my identity. I am a scalper. I shall not move from scalping. And then usually I see the number of years that the quick scalpers are trading, and it's usually like no more than 2 years, in some cases 6 months to a year, even less. That's very worrying to me. It's like, so you're scalping 100 trades a day, 50 trades a day. You don't really know what your setups look like. You don't have defined playbooks. Does that not sound like a complete recipe for disaster? And then they claim they have very high accuracy. Oh, I aim for high accuracy. And then I look at the previous VIP season. It was quite a laugh because, there were a few gems, and we're going to talk to one today, actually, one of the gems from the first season. Her name is Eloisa. She's going to be on with me for Back to the Futures, or whatever we're calling that segment now, at 1 p.m. Central. You know, apart from the few bright people like Brad Sims, Dr. Phibb, Eloisa, and maybe a couple of others, they were all trying to be scalpers, but they all had heavily negative R, and they all had low accuracy. So I'm like, those two don't go together. You can't be a scalper with low accuracy and negative risk reward. Like, are you like trying to lose on purpose? And they're like, I'm struggling. Oh, I wonder why. So let me say it here. Risk reward should be a movable thing, right? It should dictate the type of day that you're seeing, should dictate what you will do. Are you going to follow a trend? Are we in a trending market? Yes. Are we in a sustained auction today? Yes. Why are you scalping? Question one, right? And same goes for trend followers. What kind of a day do we have? Well, it's inside day, balance day. are you still going to be looking for a trend when there's none to be had? So the whole idea that, you should have like a static risk reward or 3R or bust, I'm more in favor of looking at the day type and then going anywhere from 1 to 2R. But if there's an extended move, hey, go nuts, hold it for 4 and 5R. Great. Get that home run, baby, right? For those people who are not there yet, you need to develop those skills. Don't be so married to a particular, unless you're a market maker. We have Short Life Hacks here. They come from an institutional background, and I don't care what he does, because he's been doing this for 20, 30 years. He automated his approach, and he's got, a ton of experience doing that. Full respect, right? But for those of you who are trading for like 6 months, 1 year, and you think you're going to be successful as scalpers and scalpers alone because you don't have patience, that has nothing to do with trading. It has everything to do with your identity and your perception of yourself at the end of the day. So that must change. And I'm going to work very hard with my VIPs this season to change that, to give you that flexibility. Joe, that doesn't apply to you. You're already a sophisticated investor, but welcome. Happy to discuss things. And yeah, so try to be a bit more open-minded, I suppose. Don't be married to any particular style. You might be a scalper at your core when the day is like, okay, range, this is my time to shine, right? But for the other days, either recognize that maybe that's not your strength, because I know a lot of people that struggle in trending markets. Like, for example, I have so many former VIPs who couldn't stay in on a trade longer than like 5 minutes. That was very funny. And I think it's because of the NQ craziness. I think that's why. I think it's because NQ is so bonkers intra-candle that it will force you out of perfectly good setups. But then you move them to something else, and suddenly they turn into calm traders because they've been dealing with all this nonsense of NQ for so long that they actually developed some coping skills because NQ stabbed them in the back so many times, and they finally went to, or how does Anne-Marie says, you got shanked by NQ so many times that you kind of learn to roll with the punches, but now you get to ES or YM, and you're like, wow, this is so relaxing. This is like, you can read the order flow, you can read the book map, you can wait for candles to finish, and you're like, wow, trading doesn't have to be stressful. Oh my goodness. But yeah, gold, I don't think it's any particular great area for like a committed move, but let's see what COMEX brings, because like I said, if that opens below value, that might be a little bit clearer to me. So let's move on from that. I mean, this copper trade's still surviving, surprisingly. Didn't move into profit, but it's still at the entry. Hasn't drawn into the move. That line graph at the very bottom, is that RSI? No, I do not use RSI. I will never impart RSI on unsuspecting traders, personally. It is average to range. That's kind of similar to ADR, but it looks at the previous 14-day periods, even though I like the 9. And it's there because I like to watch at the buzzer, even though I don't really chirp and chat too often. Sometimes I do if I'm drinking, but most of the times I just lurk. And I know that Coach Jay lurks sometimes if he's awake for the Euro trade too. So the ATR is a measure that you can use to scale your stops, and it's a kind of a twist on what I do. I use ADR and ASR, which is actually my concept, to look for like dynamic, let's call them bands, dynamic bands of the previous 10 days or 14 days of the either the full 24 hours or the regular trading hours. So that's where my twist on it comes. So rather than just looking at it as an oscillator, I actually look at those as levels. But I take them as a mean average from n number of days prior. Whereas this one looks at n number of periods, if that makes sense. So both are useful. Both are useful. I like to use the retracements. Like, let's say I'm looking for, let's use this copper, for example. I'm finding I can't concentrate on multiple things when I'm explaining stuff these days. Is that just aging? Am I just old? So let's say we have this initial balance high here, and then I look at what the ADR or ATR is telling me. It's actually telling me 13 points for that purpose. So I would then measure the retracement of the candle on a 30-minute time frame. Again, very different than Coach Paul, but different yet similar, right? So you're still using the measure. Where is that measurement? Price range. There we go. So now that we've opened this particular candle, this 30-minute candle, I would actually measure 13 points. And then if I want to re-enter a trade or maybe add into this trade, I'm kind of, in this case, I'm not entirely certain that this is going to roll over. I'm just kind of ballpark saying, well, we're trying to leave the value area. You know, we've left the value. Did we leave the value? Hold on. No, that's crude oil. Where's my... I've lost the chart. Give me 1 second. Yeah, so we've left the value by a few ticks. But if I want... Like, let's say I wasn't in on this. Or I want to add into this. Now, I am a huge proponent of actually scaling into something around a zone because I'm fairly confident in my post-NY cut trades. Not so much in the London trades because these are products that I really only have... Like, I've traded them before, but usually for COMEX. For the London session, I really only had the last year to fall back on the validity and accuracy of the setups that I usually use. But statistically, they're tested for COMEX post-NY cut. But let's say that I'm very confident. Let's say we opened below value. We rejected the value low, so we're not inside value. It's a different type of open sentiment. And then I'm looking for a test of the ballpark initial balance low for an add-on or an initiation into the trade. I will use the ATR measure for the pullback and then aim to get in on it, because at that point that is the average candle range and that's been exhausted around my level of interest. Okay, so that makes sense. So you have a key level, it smashes the opposite way, starts moving, gets to your problem area where it should reverse yet again. And that provides you with almost like a measured move, but with a twist. So that's what the little oscillator at the bottom is used for in my style of trading. I usually use it for these sorts of sustained auctions when I don't have a clear area where I might want to look for a weakness, and then I will measure it and then go, what do we have there? And sometimes you have single prints or FVGs or whatever people call them these days. But generally you can find either a low volume node or maybe a high volume node as well, or some kind of a GEX level that might not be super important. And it gives you an additional statistical measure of how much pullback to expect per any 30-minute candle. And or also if you've had a huge move down and you're like, I'm so going to go into a breakout or breakdown, but then you find yourself in a trade that like pulls back massively. So instead of jumping in after a very big move, you can do this ATR measurement to at least get a little bit of a pullback and a reference price where you should be getting in on a pullback, and then whatever you want to use to get in. It could be order flow, it can be actual price action, like whatever floats your boat. That's your entry style. But yeah, just another little statistical. I'm all about statistics. It's all about, observations, taking in the mean averages and kind of using them to the best of my ability. Do I always use this? No, because sometimes if I'm looking at a failed auction and it's already smashed through the entirety of the initial balance, there's no setup. So unless I found another reason why I would go into it somewhere closer to the initial balance edge when it was failing, I would just stay out, because there's no point. Like, I have no profit margin available on that trade. I have clearly defined targets on each of my playbooks, and as core playbooks I probably have about 5 of them, but I have variations on that. So I have sustained auction, but then I also have Seeb and Weeb, which are variations when the market is not really smashing above initial balance, but kind of falls into it, then runs into something like either overnight VWAP, or runs into a supply and demand area that we created earlier in the day with quite a bit of volume, and things like that. So yeah, explain value. Value area is a distribution curve from the previous day trading in the simplest way possible. The belly, the belly that you get, like distribution. So price goes up, then kind of creates a distribution. That's the value area, right? So value area in the profile means 70% of yesterday's business. So wherever we were high, low, you basically start from the open and then you add up TPOs, so letters, ticks, whatever you want to call them. And then you build value. So once that number expands to like 70%, you stop. So it is a finished, done and dusted measure. I am less in favor of using value intraday. So for example, right now, we're still kind of sitting inside developing value. But to me, knowing how those values are calculated, I know that they're calculated quite some lag. And I can see, if it's a big move, I can see it with my eyes. I don't need the value to tell me that we've exited it. So it might be useful for some people who are maybe not that great at figuring out whether a candle is out of average size but I would think that anyone going into this business would be quite visual. I don't know. Call me crazy. Oh, thank you, Bruno. Right-click on the chart, remove drawings. That's a very useful thing to know. I'm going to write that down for next time, rather than all of you looking at me, click, 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 delete, 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 whoops, delete, delete, delete. So, yeah. Lazy Eye says, you're right, copper high time frames look ugly. Yeah. Another reason why I'm in this copper trade. So I'm just going to show you where the option interest was last night, because it's end of day levels, right? So just over here, it actually went below. So this was. Let me just check that the time is right. So this was a London Open. Immediately they bled through the core resistance and gamma wall, and we're just sitting below it. So now if we can get below this put support, which is a danger zone, right? It's a dangerous level. If we can't, then obviously I'm going to have 2, 3, and 4 hypo. I always have 3 or 4 hypos to account for both directions on the day. They're all based on playbooks, and if one of them doesn't work out, I have the other 3. If I find that by trade number 2, I got absolutely nothing out of it, I decided that that I'm going to move to something else. So, if I can't make it work in a couple of trades, I just won't trade that, But yeah, just because we're below the gamma wall, we could go back up to gamma wall. That would be a better short, but we'll see. We'll see what LME does. Any news when VIP starts? I'm waiting as well, man. I am waiting. We still have some legal and compliance stuff to take care of. But actually, literally, we're waiting for one graphic before we can start doing things. For your combines, that will take a little bit longer. And it's actually a good thing, because last time we sort of rushed into it and gave everybody access, and then we had a few people dropping out because they went straight into an XFA and then blew out of an XFA the very next day. So we're trying to have that not happen this time. So we decided to delay the creation of the combines. But before we can do any sessions and stuff, because I run things with slides and with concepts and with different sort of things that I want to illustrate in a particular way. And for that, we need the CFTC disclaimer, and that's coming from compliance. So we're just waiting on that, and then we can start the sessions. What is MHG market? Microcopper. But you've never heard of microcopper before you came onto the stream. I have never seen a promo code. Do they speak about that or what? They don't have promo codes anymore. Whether they will reintroduce them at some point, I don't know. But I do know they scrapped the whole affiliate program, and there's only now partners. And those of us who are closely affiliated with Topstep, that is the way they wanted to do it. They did not want to go into the race of who's going to have the lowest pricing, because that's a game you can't win in business, okay? I'm actually happy we're out of that race. You can sort of outprice to a degree, but then you start having problems. Then you start having a whole bunch of people trying to exploit the super cheap pricing, and then you get gamblers, then you get people who YOLO, and not only is that not particularly useful, you've seen some companies trying to go the other route now completely after having one story. Now they have another story. Why? Because the super low pricing is very attractive. Let's not lie here. It's very attractive. But even they've realized that something needs to change. So I'm actually glad that Topstep has decided not to get involved in that whole who's going to have the lowest priced product. It's like, what are we, Poundland? Come on. I hear they have 20% off for the new dashboard whenever they decide to migrate everybody onto it. And I know, we've had issues with the dashboard, yes. But think about it this way. Isn't it better that they're doing that now in August to try and iron out all the bugs when the markets are fairly quiet, a bit weird? And in a way, just think of it as something that's meant to be, okay? It's better that they do it now than September, October, November, when things are like prime time trading. So I would rather have the bugs on anything new that they're doing on the back end in August and July than in September, October. So I think it's a good year to do it. There's going to be growing pains. But again, how you behave, just keep in mind, because me, Anne-Marie and JD, we were in chat, we were on Lunchbox Trading last week, and frankly, chat was just going completely insane over the fact that there was a freeze on Topstep X. And it's like, it's a technical issue. Yes, there's a few. So what? It's like, it's just one day. And I get it, it's frustrating. But to me, that was a direct reflection of how people behaved when they lose a trade. So whatever the problem is, it could be the platform, it could be them, it could be them doing, them doing things they're not supposed to be doing, full porting it, getting liquidated. It could be whatever, right? And they will still react by putting fuel on fire instead of going, okay, guys, whatever. And actually somebody in chat said, I do hope that Risk is watching this, because some of these people freaking out should never be in it. And I was like, that's a bit mean, okay? Because we have a lot of novice traders. You can't expect them to be as emotionally regulated as some of us who have been doing this for a very long time. But just know that whatever your reactions are, like let's say you suffer from road rage, that is a direct reflection of how you behave with challenging situations. It's not a good thing for trading. If you're an explosive person, You need to change that, like ASAP. It's not going to serve you well in trading. You can't be explosive when things don't go your way, because in this line of work, a lot of things will not go your way, and sometimes for quite an extended period of time. If you can't be okay with that, you either need to change, or I'm sorry, you need to find another job. It's not for you. Again, that honesty that comes back to bite me. Why people are like, oh, Dee, you're being mean. I'm not being mean. I'm being honest. There's a difference. I will never do low blows with people. I will never make fun of anybody's trade. I will always constructively talk it through. And I don't claim to know everything. I know a lot, but I do not know everything. I'm not, somebody who trades through all of the sessions. And I'm an expert in everybody. I know mechanistically because I've traded them enough to notice certain things. But if you come and ask me about corn or lean hogs, I'm going to say go to Coach Hoop. I don't know anything about that. If I want to try a, lean hog trade, I might try it with Hoop's help. I will sit down, have a chat with him and go, hey, anything fundamental I need to know? Does it follow levels generally? Like what sort of things do I need to watch out for? Is there a time of day that I need to pay attention to? What time does the market open and close? Like one of the first things. And, things like that. But I will admit that I don't know everything. But at the same time, I've been at this for 18 years. And I am a commodities trader. So, my commodities are precious metals, energies markets. That is my specialty. And a little bit of sort of DAX. And for the power hour, I sometimes like to do ES or YM. Back in the day, it used to be sometimes NQ, especially if we have like negative delta happening on the day and we just kind of keep going up and up, or quite the opposite, we have positive delta and yet everything is falling. So, certain divergences that can be taken advantage of. So, yeah. Vikas Kumar says, I was at 28.50 and then came back to 23.50. Oh, 2,000, you're talking P&L, okay. Now I'm again 2,730 across. It's very tricky and tough to make last couple of hundred. What should I do? Take a step back, go and breathe, first and foremost. Don't try and do it today. Don't try and do it today because you're losing the plot. You're chasing the final 150, 200. And you know how that ends? You blow up everything. So just take each day as it comes. It's just another day. Okay? I don't see the rush. The rush? So I have a tattoo here. Pretty big on my forearm. It's in Serbian. It says haste makes waste. Keep that in mind. You rush, all you get is rubbish. So be patient. Exude the patience required in the XFA. Because you won't be able to do chasing, full porting. Because we know how that ends. XFAs that don't last past the 3 days. Why? Because you want profits now. And then you get to 4th day and you're like, right, 1 day to pay out. And then you blow up. Why? Because you're rushing, because you're trading P&L. You're not trading your process. Joe trades in Spain. I'm glad to hear that. How's the weather? In the Asian Euro markets, what products move the most? I moved from the US to Spain and rather trade in the morning than wait until the afternoon and fast markets. DAX. DAX trades quite well, really well. Like out of all of the things that you're looking at, DAX is probably the only one that has consistent movement and liquidity for this time of day. Short story for you. The reason why we chose this time of day for my Euro trade was because we started it as a means for me to trade DAX on Topstep. Then DAX never came. Then Dee got stuck trying to figure out what the hell she should trade. Then Dee found copper. So it was a learning experience which brought my expertise even higher, because now I have, 13 months of watching copper, gold, platinum, and a whole bunch of other weird markets. But I still will trade DAX the second that we get it in Topstep, okay? Just to make that perfectly clear. Because I find a lot of these London trades in this zone very painful, very slow, annoying, not committal, you know. So as soon as we get DAX, I'm jumping on that like a tramp on a sandwich. Yeah, what if the rebuild is tomorrow? Bruno wants to know. Well, since it's a 50K, you better have, you know, the cash to do the 5 accounts. Otherwise, if you can't afford the 5 account rebuild, unfortunately, you probably should just go down to a couple of accounts. You know that disclaimer that Bruno posted? Let's bring that up. So just to pinpoint certain things that many people glaze over. Okay, let's go over this for a second, right? Never risk more than you are willing to lose. Remember that losses are rarely limited to the funds in your accounts. It's possible to lose more, blah, blah, blah. Losses can happen fast, so you should not risk money that you cannot afford to lose. How does that translate to someone buying 5 combines and then having an issue with affording those 5 combines at the next rebuild? Is that not against the disclaimer that we say to read very carefully and that nobody pays attention to? Let's be honest. So if you're somebody who cannot afford the rebuild of 5 combines, you have no business buying 5 combines. Trade and buy combines within your means. You can't afford them, don't buy them. Very simple. Buy 1. Can end up in a live account anyways. But no, people trade with dollars in their eyes. I want money now, yesterday. If you can afford it, waiting one more day, even if it's rebuild day, shouldn't be a problem, right? But what I'm seeing with Vikas is that he's losing the plot. He's like, I was at 280, now then to 350. I fought back to 2730. And, oh my God, I just need 200. To me, that is just like, I'm losing the plot. I'm close to passing. I want to pass it today, right now. It's like a three-year-old throwing their toys out of a pram. I'm not going to have an XFA at the end of the day. Boing, 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 boing. Whoops, I lost one. Boing, boing, boing. Oh, I lost another one. Boing, boing, boing. F it. 15 lots. Smash. Combine's gone. That's how that story ends. So yeah, take a day off. Come back tomorrow with a clear head, do some exercise, go for a walk, touch grass, hug a tree, play with your dogs, play with your children, hug them. You know, get in touch with things that really matter. This is just money. So, and the markets will be here tomorrow, you know? Tuesdays are a weird day anyway. So, yeah. So, Joe, to go back to your question, when it's not summertime, when it's like actually things moving, copper and platinum are actually a pretty decent choice for this time of the day. But DAX, by far, out of all of them, 100% I would choose DAX over any of it. So yeah. Pi wants to know, I was wondering when Delta is green and market keeps falling, is that buyers getting absorbed? They're not getting absorbed, they're getting run over. It's not about the absorption. They literally just get run over and they fuel the downside whilst they're still aggressively placing buy market orders. It's typically when the markets are unwinding in and around the areas of... okay, so gold is falling. I'm hoping that's going to kind of pull copper a little bit down. They're only at 66% convergence though, so yeah. Would like to see that higher, but gold falling is going to make it a little bit more difficult for copper to keep rising, so let's see what happens. But yeah, it's effectively, if you look at it this way, if you buy something, what is your stop loss order? It's a sell, right? But you've aggressively bought at market, effectively, and that's what the delta measures. The actual aggressive buyers that are buying at market, so click market order, and then getting run over. That's what brings the days. Like yesterday, we had the opposite. We had people keep shorting, and we've even seen it on TopstepTV. We had people, I'm going to short this. It's like, it's negative delta. It is going up. Do not short it. And they're like, I'm going to still try to short. Okay. Oh, it's trade ICT. I'm going to short it. Okay, great. How did that work out? Luckily, some people had break even, so that was a clever move. But it's like it's staring you in the face. Negative delta, market keeps rising. Until that negative delta disappears or at least gets like shaved off by half, but ideally disappears completely, that's the point to try and short it, not when it's still going negative. That's why I have it on Bookmap. Bruno says, I know someone who's about $30 to pass, then hit the maximum loss limit. Exactly. In the chat. Yeah. I'm not going to mention any names. But hey, Dolby talks about the time when he was 1 penny away, 1 cent away from passing, and he managed to lose the entire combine. Dangerous game, guys. I know that I joke around because, I grew up with a comedian father, so, that has a lot to do with my demeanor and the fact that I crack jokes all the time. But it's a serious thing. You can, all that work, and then you're chasing what is effectively a negative risk reward. You're chasing 200 on the day when you've already had a pretty busy morning, maybe even an evening if you are, in Australasia somewhere. And now you're just chasing those last 200 with the final pieces of your mental capital that's already not there. Your focus is not there, and you just got the goal that seems further than ever, and it's the toughest $200. Make it easier for yourself. Go rest up. Go for the new setups tomorrow, the same setups that you always do, and pass it like a piece of cake. Don't panic. It will be much easier that way than you derailing all of the work that you've done already. So just tap yourself on the back and say, good job. I followed all my rules. Almost gave some of it back, but then fought my way back nearly to the high watermark on the day. Job well done. I'm making an executive decision to end this day and come back tomorrow for the final part. Why? Because the probabilities will be the same at the same part of the day. Now they're not. Now we're getting into a weirdness of overlap when anything can happen. I could never find consistent, unless it's like copper and platinum, I could never find setups that consistently appear over and over to a degree of over 65% accuracy and frequency of occurrence. So you need something that occurs a lot frequently, not just like once in a blue moon. Oh, it's a high probability trade. Yeah, but you see it 3 times a year. How is that going to work for intraday? So we need something that happens every day, nearly. We need situational awareness, playbooks that will account for nearly every situation. So one for a range-bound day, maybe a couple for failed auctions, so some sort of a mean reversion, gap fills, and all the likes. And the ilk, or elk, as Dave Gorman once said. Trending day, sustained auction, continuation after pullbacks. That's another one. So have like those sorts of hypos categorized very well. Maybe orb on equities if we have a gap day. If it's an inside day, I had this chat and somebody in the VIP, just don't, orb doesn't work well if it's a balanced market, okay? Because by default, it's a momentum trade. And if you have a balanced market, that's immediately a problem with 2 strategies. I think that Slowboy says, I thought that arrow was a palm tree. Yeah, palm tree. You can put a palm tree. Is there no search on the emojis? Oh no, guys. Topstep, we need to have search on emojis. Let's find a palm tree. There it is. There you go. Just to mess with your head a bit. Just because. This is called the ATR palm tree. Palm tree. Palm tree of ATR. That is funny. Yeah. I think it's time for everybody to go to sleep. All right, we've come to the end of the show. Not much movement in this bloody copper trade again. August. Welcome to August. It will test your patience up, down, and sideways, especially for the London session, until we get DAX. So, luckily I made a bit of cash in DAX, sitting at about 500 on the day, so not to be sniffed at. Now I'm going to go have a big break, and then I have to go for a vet meet and greet with 2 of my dogs, and then I will be back later on for the lovely segment of Back to the Futures, when I will have one of my former VIPs from the previous season, a lovely lady named Eloisa R, is going to come and join us to chat about a whole bunch of stuff. Maybe we'll put on a couple of trades if we find something for that time of day. In the meantime, that's all I've got for you. So hopefully you got some value out of this this little quiet session that we've got going on. Copper still very much in range, but at the same time has not moved anywhere. So I'm gonna maybe give it until the LME open. Then if they don't continue to move it in this direction, because it is still a sustained auction, then I'm going to close it early and wait for the better movement with more follow-through, because right now we don't have that much follow-through. And I need 70 to 100 ticks of follow-through in order for my strategy to work. So yeah. All right, did I miss any questions? Other than Bookmap, any other good platform to display Delta? Good? No, but CTST4 used to have it. I prefer Bookmap because I don't know, I like the cartoonish side of things. So maybe Quantar? Maybe Quantar. But again, I have not used Quantar, so I cannot advise. I tried using it, didn't like certain aspects of it, and I'm too old to learn brand new things. So brand new platforms. This is a whoosh. Yeah. Anyway. Sensation says, I don't get to watch the session often, but D keeps me attentive from something other than my trades, so good in a night like tonight. Absolutely. That's it for now. Thank you for hanging with me. I really, really appreciate you. Sorry for all the honesty, but, sometimes we have to learn some hard truths in order to move forward. That is my only intention here. Sometimes you have to hear it from somebody who's not related to you and has no other objectives but to try and make people pass all of these challenges with less drama. Okay? That's all for me. I will see you a little bit later. I'm Mark Stoker D. This was the Euro Trade on TopstepTV. Take care.